All right, so get this. The masterclass we're diving into today. It's called 50x Your Money with DeFi. No risk of liquidation.
Catchy title,
Yeah.
right?
Oh, yeah. Definitely grabs your attention. But 50x returns with no risk in DeFi. I don't know about you, but
Yeah, got to be a little skeptical about that.
right, like how is that even possible?
Well, that's exactly what we're here to find out. We'll break it all down. But first, for anyone who might be new to this whole thing.
Yeah, good point. Not everyone's a DeFi expert.
Exactly. So think of DeFi like this. It's like, imagine a financial system without the traditional middlemen, you know, no banks.
Ah, okay. So cutting out those intermediaries.
Yeah, exactly. You're in control. You've got these digital wallets, kind of like your own personal bank, but on the blockchain.
Oh, I see. So it's like peer-to-peer finance, but powered by blockchain technology.
You got it.
Yeah.
And then you have these platforms. They're called decentralized exchanges.
Like those, what are they called?
Uniswap, PancakeSwap, those are some popular ones.
Right, right. And on those, you can trade crypto directly with other people.
Yep, no more waiting for bank transfers or anything like that. It's all pretty much instantaneous.
Okay, that does sound pretty efficient. So then where does this masterclass fit into all of this?
So this masterclass is basically claiming to show you step by step.
How to actually like get those 50x returns.
Well, they say they'll teach you how to utilize these DeFi tools and strategies, yeah.
And they emphasize safe wealth multiplication, right?
Right. Along with using different tools and platforms and navigating the risks involved in DeFi. They want to cover it all.
Okay. But I gotta say, the whole 50x with zero risk thing, it sounds a bit too good to be true, doesn't it?
Yeah, that no risk part, that's a big red flag. And to really understand why, we have to talk about liquidation. You see?
Oh, right. Liquidation in DeFi.
Exactly, because with DeFi, you can amplify your potential returns with leverage, right?
Like borrowing against your crypto assets.
Yeah, exactly.
Yeah.
But here's the catch. If the value of your collateral, what you're borrowing against, if it drops too much,
You could lose it all.
well, you risk liquidation, meaning your position gets automatically closed to cover the lender's losses.
So it's not actually no risk at all. There's a real possibility of losing your money.
Exactly. DeFi has huge potential, but it's not a risk-free paradise. This masterclass seems to be targeting both beginners and more experienced investors.
So trying to appeal to a wider audience.
Yeah. They break down complex concepts like smart contracts, you know.
Oh, yeah, smart contracts. Those can be a bit intimidating.
They can be. But basically, they're like the rules governing these financial transactions, all coded and automated. Understanding how they work is crucial if you want to stay safe in DeFi.
Okay, so smart contracts are key. Got it. Let's imagine someone, say Amanda, who's new to all this. She's got a little bit of crypto, wants to grow her wealth, sees this masterclass.
Good example. So what would be the most important thing for someone like Amanda to understand about DeFi from this masterclass?
That's a good question. What do you think?
Well, I'd say the biggest takeaway is that DeFi is a powerful tool, but you got to be cautious. It's all about understanding that while there's potential, there are also risks involved with every single strategy.
Totally agree. You can't just dive in head first. Speaking of diving in, though, they do go deep into specific tools and platforms.
Right. They talk about things like wallets, like MetaMask, and then decentralized exchanges like Uniswap and PancakeSwap.
Yeah, can you quickly break down why those are so important in the DeFi space?
Sure. Think of MetaMask as your key to the DeFi world. It's this browser extension, lets you interact with all those decentralized applications.
Including those exchanges you mentioned, right?
Exactly. Uniswap and PancakeSwap, they're like the big marketplaces of DeFi. You can trade your crypto directly with others, no centralized exchange needed.
Okay, so more control, more transparency, and potentially lower fees compared to traditional exchanges.
You got it. But let's not forget that 50x claim. How realistic is that, really?
Yeah, it's a pretty bullish statement.
To put it mildly. While DeFi can offer some amazing opportunities for high returns, promising 50x with no risk is misleading.
Yeah, no doubt. And that's where those specific strategies come in, right? They talk a lot about things like staking, yield farming, and liquidity pools.
Exactly, and they claim those are the keys to unlocking these massive returns. But it's not as simple as just clicking a button and watching your money multiply.
Right. Each of these strategies has its own risks and complexities.
And understanding those is absolutely essential to make smart decisions.
Okay, so let's break those strategies down one by one, starting with staking. What's the basic idea behind it, and what are the potential rewards and risks?
Staking is like putting your money in a high-yield savings account, but with a DeFi twist. You're essentially locking up your crypto to help secure the network.
And in return, you earn rewards.
Right. But unlike a savings account, the value of your staked crypto can fluctuate, and there are also risks associated with things like smart contract vulnerabilities.
Okay, so there's potential for passive income, but also potential for loss if the market tanks or if there's a security issue.
Exactly. It's a balancing act.
All right, so staking is one way to potentially generate passive income. But this masterclass suggests that if you're looking for even higher returns, you should look into something called yield farming. What exactly is yield farming?
Yield farming. Oh, that's where things get a lot more complex and frankly riskier. It's kind of like you're constantly on the lookout for the best opportunities to maximize your returns.
So you're actively managing your assets.
Right. You might lend your crypto on one platform, then use that as collateral to borrow on another, and just keep moving things around to chase those high yields.
Whoa, that sounds like a lot to juggle.
It definitely is. And while the potential rewards are tempting, yield farming requires a pretty deep understanding of DeFi protocols and a high tolerance for risk.
So not exactly beginner friendly unless you're willing to put in a ton of research. What about liquidity pools? How do those fit into the whole DeFi puzzle?
Liquidity pools are essentially what make decentralized exchanges like Uniswap and PancakeSwap work. They allow people to swap tokens smoothly without needing traditional order books.
Oh, okay. So you contribute your crypto to a pool.
And then you earn a portion of the trading fees.
Got it. It's like being a market maker, helping facilitate those trades and getting a cut. But there must be some risks involved with that, right?
Definitely. One of the biggest ones is something called impermanent loss.
And permanent loss, what's that?
Well, it happens when the price ratio of the two tokens you put in the pool changes significantly. So you could end up with less of one token and more of the other, and that could lead to a loss compared to if you just held those tokens separately.
Ah, so you could lose money even while earning those fees if the market moves in the wrong direction. It seems like with DeFi, you constantly have to be on your toes.
You do.
Hmm.
There are no guarantees, and every strategy comes with its own risks that you have to carefully think about.
Okay, so we've got staking for some potential passive income, yield farming for those who want to go after more aggressive returns, and then liquidity pools for those who want to be a part of that decentralized exchange ecosystem.
Yeah, a good overview of some key DeFi strategies.
But none of them are without risk.
Absolutely not. The potential for those big gains is there, but you can't ignore the potential downsides.
Well said. All right, so we've unpacked some of the basic concepts from this masterclass, but there's this whole other layer we need to discuss, the idea of DeFi being a path to financial freedom.
Right, we've seen those testimonials, those inspiring stories about people achieving things they never thought possible.
Exactly. Are those claims genuine? Or is it all just hype? We'll explore that in part 2 of our deep dive.
So let's dive a little deeper into these testimonials and this whole idea of financial freedom that seems to be woven into the fabric of DeFi. We were talking about Amanda before.
Yeah, her story definitely resonated with a lot of people who see DeFi as a potential way to break free from those traditional financial systems.
It's like DeFi offers this alternative universe of finance, right?
Yeah, where you make your own rules, kind of. But how realistic is that vision? Is it actually possible to achieve true financial freedom through DeFi? Or is it just a mirage?
That's the million-dollar question.
Yeah.
And the truth is, it's probably somewhere in between. Look, DeFi definitely has some real advantages over traditional finance.
Like what?
Well, for one, it's generally more accessible. You don't need a perfect credit score, don't even need a bank account to participate. And it's way more transparent. All the transactions are recorded on a public blockchain. Anyone can see them.
Okay, so that sounds pretty empowering, especially if you felt excluded by those big institutions.
Right. But there are also some downsides to that lack of centralized control.
Yeah, I was thinking about that. What happens if something goes wrong?
That's the thing. The same things that make DeFi so appealing,
Yeah.
the decentralization, the lack of those middlemen, can also make it riskier. Lose your private keys, your funds are gone, no one to call for help, and then there are all those scams and hacks to worry about.
So it's a trade-off, more freedom, but also more responsibility.
Exactly. More control over your own finances, but also more risk if you're not careful. Understanding that is key for anyone who's even thinking about dipping their toes into DeFi.
Right, whether you're chasing financial freedom or just looking for some new investment opportunities.
You got to know what you're getting into. It's not about blindly jumping on a bandwagon.
All right, so let's get back to those strategies the masterclass outlines. We've touched on staking, yield farming, and liquidity pools, but I think it's time to get a bit more specific. Let's start with staking. What are the different types of staking, and how do their risks and rewards differ?
Well, staking is kind of a broad term. There are actually several variations. The most common type is probably proof of stake, POS staking. That's where you lock up your tokens to help secure a blockchain network, and you earn rewards in return.
Like a way to contribute to the network's security and get paid for it.
Yeah,
Yeah.
exactly. Some of the big networks use this mechanism, like Ethereum 2.0. Then there's delegated proof of stake, DPoS. With this one, you delegate your tokens to a validator, and they handle all the technical stuff of actually securing the network.
Oh, so it's like outsourcing the work, but you still get a share of the rewards.
Exactly. It's more hands-off, good for people who don't want to run their own validator node.
Okay, so it's like choosing between managing your own rental property versus investing in a REIT. Different levels of involvement, different levels of potential return.
Good analogy. But how do you pick the right staking option? Well, it depends. Your risk tolerance, how tech-savvy you are, how much money you want to put in, those are all factors to consider.
Got it. So if I'm comfortable with the technical side of things, direct POS staking might be a good option.
Yeah, if you want more control, that could be the way to go. But if you're looking for something more hands-off, DPoS is a solid alternative. But remember, there are always risks, no matter which way you go. Price volatility is a big one, and then there's something called slashing, where you could lose your staked tokens if the validator messes up.
Ah, so you're kind of trusting the validator with your tokens.
You are. And then there's smart contract vulnerabilities we talked about earlier. Those are always a risk factor.
Okay, so staking has its nuances. Now, what about yield farming? Earlier, we talked about how it's kind of like being a financial acrobat, jumping between platforms to maximize returns. That sounds exhausting. Are there any tools that can help streamline the process?
There are. And thankfully, they've gotten much better. There are these platforms called yield aggregators, and they basically do a lot of the heavy lifting for you. They pool funds from multiple users and then automatically allocate them to the highest yielding DeFi protocols.
So it's like a robo-advisor for your DeFi investments.
Pretty much. It takes some of the guesswork out of it, but are yield aggregators a silver bullet? Sadly, no.
Figured there had to be a catch.
While they simplify the process, they introduce their own set of risks. You're trusting them to manage your money, to make smart decisions, and there have been cases where these aggregators have been hacked or exploited. People have lost a lot of money.
So even with these tools, you still need to be cautious and do your research. What about liquidity pools? Earlier, we talked about impermanent loss. That sounds pretty scary. Are there ways to minimize that risk?
There are some things you can do. The main one is to be smart about which liquidity pools you join. Pools that have stablecoin pairings like USDC and USDT, they tend to be less volatile than pools with two really volatile assets.
Okay, so sticking to more stable assets could help.
It could. You can also look for pools that have low trading volume because high volume can actually amplify impermanent loss.
So it's all about being strategic, understanding how these pools work.
Exactly. DeFi is a space that really rewards those who take the time to learn and stay informed. And the good news is there are more resources than ever to help you do that.
That's great to hear. It sounds like DeFi is becoming more accessible. But let's circle back to that 50x claim. We've talked about all these risks. Is it even possible to achieve returns that high in DeFi?
Well, it's not completely impossible, but it's highly unlikely, especially in a way that's sustainable.
Meaning it's probably not going to last.
Right. The very early days of DeFi, there were some crazy returns, fueled by speculation and leverage. But as the market matures, those kinds of gains become rarer and much riskier.
So don't believe the hype.
Yeah. Don't get caught up in the hype. DeFi has potential, but it's not a get-rich-quick scheme.
All right, so we've covered a lot of ground. We've talked about staking, yield farming, liquidity pools, all the different risks and rewards. But this masterclass is also about the bigger picture, the promise of financial freedom.
Right. It's about more than just making money.
Exactly. So let's unpack that idea in the final part of our deep dive. So we've really dug into the nuts and bolts of DeFi, right? The strategies, the risks, the whole 9 yards. But this masterclass keeps coming back to this theme.
Yeah. The financial freedom thing. It's a powerful idea.
It is. And Amanda's story, it really embodies that, right? Like achieving a level of financial success that just seemed impossible before.
Absolutely. And I think her story speaks to a lot of people. People who are looking for a different way, a way to take control of their own financial future.
It's like DeFi is offering an escape from those traditional systems that can feel so, I don't know, rigged.
Yeah, rigged, opaque, restrictive, take your pick. People want more autonomy, more transparency, and they see DeFi as a potential solution.
It's like this promise of a level playing field. Anyone with an internet connection can potentially build wealth. But how much of that is real? Can DeFi really deliver on that promise? Or is it just hype?
I think we have to be realistic, right? Financial freedom, it means different things to different people.
That's true. For some, it might be about getting out of debt. For others, it might be about building a passive income stream.
Exactly. For some, it might be just about having more control, making their own choices without someone else calling the shots. And DeFi definitely offers tools that can help people achieve those goals.
It gives them options, at least.
Options they didn't have before. But it's not a magic solution.
No, it still takes work, and there's still risk involved.
You have to be willing to put in the effort, educate yourself, and yeah, accept that there's always the potential for things to go wrong.
Right. No risk, no reward, as they say. But I'm curious, do you think this masterclass does a good job of presenting that balance? The excitement of DeFi, but also the need for caution.
I think they do try to show both sides, yeah. They showcase those success stories like Amanda's, which
Mhm.
is inspiring, but they also stress the importance of understanding how things work.
Like those smart contracts we talked about.
Exactly. Understanding smart contracts, managing your risk, using tools like stablecoins to reduce volatility, all that stuff. They even have resources for further learning and ways to connect with the community.
Okay, so it's not just about selling a quick fix. They're actually trying to give people the tools they need to succeed.
That's what it seems like.
Yeah.
And that's really what true financial freedom is all about, right? Having the knowledge, the skills, the resources to make your own decisions.
So as we wrap up our deep dive into this masterclass and the world of DeFi, what's the biggest takeaway? What's the one thing you want our listeners to remember?
DeFi has the power to change things. It can give people more control over their financial lives, but it's not a free ride.
Right. Got to be smart about it.
Exactly. Don't let the excitement, the hype, cloud your judgment. Educate yourself, start small, and never invest more than you can afford to lose. Those are the golden rules.
Great advice. And remember, the journey to financial freedom, it's not a destination, it's an ongoing process. It's about learning, adapting, making choices that empower you. Whether you're just starting out or you're a seasoned investor, approach DeFi with curiosity, a critical mind, and a healthy dose of skepticism. And thanks for joining us on this deep dive, folks. It's been a wild ride.